Hello everyone. Welcome to the Stock Minds web channel. Micron Technology, NASDAQ MU, has emerged as a standout performer in the semiconductor industry, showcasing robust financial growth and a compelling valuation. The company's Q2 2025 earnings report highlights significant year-over-year improvements in revenue, earnings per share (EPS), and free cash flow, positioning Micron as an attractive investment opportunity. In this video, we will dive into Micron's recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Micron Technology. Founded in 1978, Micron Technology is a leading global manufacturer of memory and storage solutions. The company specializes in dynamic random access memory, DRAM, NAND flash memory, and other semiconductor devices, serving a diverse range of industries including data centers, mobile, automotive, and consumer electronics. Micron's commitment to innovation and operational excellence has solidified its position as a critical player in the rapidly evolving technology landscape. Micron financial performance. Micron Technology's Q2 2025 earnings report highlighted an exceptional turnaround in the company's financial performance. For the fiscal second quarter of 2025, which ended in February 2025, Micron reported revenue of $8.05 billion, marking an impressive 38.27% increase compared to $5.82 billion in Q2 2024. Micron also achieved substantial earnings growth during the quarter, with earnings per share (EPS) for Q2 2025 reaching $1.41, nearly doubling from 71 cents in Q2 2024, a 98.59% year-over-year increase. On a trailing 12-month TTM basis, Micron's performance was even more striking. Revenue for the TTM ending Q2 2025 reached $31.32 billion, representing a 71.05% increase compared to $18.31 billion a year earlier. TTM EPS soared to $4.15, a remarkable reversal from a loss of $3.43 in the prior year, reflecting a 221.3% increase. Free cash flow generation, a key indicator of financial health, also saw a significant turnaround. Free cash flow per share (TTM) was 54 cents in Q2 2025, a dramatic improvement from negative $3.01 in the same period a year ago, representing a 117.94% increase. The company's profitability also strong, with a gross profit margin of 34.73%, a net profit margin of 14.92%, and a free cash flow margin of 1.93%. In terms of capital efficiency, the company posted a return on assets of 5.52% and a return on equity of 10.1%. Additionally, the company maintains a strong balance sheet with prudent leverage, as reflected in its debt-to-equity ratio of 0.31. Over the past 5 years, Micron's business performance has fluctuated and is currently continuing to recover from the low point of 2023. Micron Fiscal 2025 Financial Forecast. Looking ahead, Wall Street analysts remain highly optimistic about Micron's future prospects. The consensus forecast calls for full-year 2025 revenue of $35.47 billion, a 41.26% increase from $25.11 billion in 2024. Analysts also project non-GAAP EPS of $6.99 for 2025, representing an extraordinary 437.73% increase from $1.30 in the previous year. These projections reflect expectations for sustained demand growth, particularly in AI-driven markets. Market sentiment toward Micron remains strongly positive, with the consensus analyst price target at $124.07, suggesting a potential upside of 16.73% from the current share price. The most bullish analysts see even greater potential, with the highest target price at $172, implying a substantial 61.84% upside. MU stock price performance and valuation. At the time this video was created, Micron's stock price stands at $106.29. Over the past year, however, the stock has declined by approximately 20.5%, underperforming the S&P 500's gain of 10.9% over the same period. Despite this recent underperformance, Micron's long-term performance remains strong. Over the past 5 years, the company's stock has appreciated by an impressive 97.8%, outpacing the S&P 500's 85.7% gain during the same time frame. From a valuation standpoint, Micron remains attractively priced relative to its growth prospects. The stock offers a modest dividend yield of 0.43%, providing additional return on investment. The current price-to-sales (TTM) ratio stands at 3.63, with a forward price-to-sales ratio of 3.22. The non-GAAP price-to-earnings (TTM) ratio is 21.08, while the forward price-to-earnings ratio is a more compelling 15.51. Although the current price-to-free cash flow (TTM) ratio is elevated at 196.02, this is largely a reflection of the company's recent turnaround. Based on FinChat data, if we look at the valuation from 2024 until now, Micron's forward PS is below the average, as is its forward PE, which indicates that Micron could be trading at an undervalued level as its financial performance continues to grow. Micron growth potential. Micron growth prospect remains strong, driven by several factors. 1. AI-driven demand growth. Micron Technology highlights the significant impact of AI on memory demand, estimating that AI servers require 8 to 12 times more DRAM and 3 to 5 times more NAND compared to traditional servers. This surge is driven by the increasing complexity and data intensity of AI workloads, particularly in training and inference applications. The company is strategically positioned to meet this growing demand with its advanced memory solutions, including HBM3E and DDR5 products. These technologies are designed to support the high bandwidth and low latency requirements of AI training clusters and edge inference devices. Furthermore, according to Precedence Research, global AI server markets are expected to grow at a compound annual growth rate (CAGR) of 27.62% through 2034, underscoring a robust market opportunity for Micron to expand its presence in the AI infrastructure ecosystem and capitalize on the accelerating adoption of AI technologies. 2. Manufacturing expansion. Micron Technology is significantly expanding its manufacturing capabilities to meet rising demand. The company is investing up to $125 billion over the next 20-plus years in advanced memory production, including new fabrication facilities in Boise, Idaho, and Clay, New York. Supported by up to $6.1 billion in U.S. CHIPS Act grants, these plants are expected to create 75,000 U.S. jobs and bolster supply chain resilience. Additionally, Micron's new packaging unit in Sanand, Gujarat, India, will produce its first chips in the first half of 2025, targeting exports for data centers, smartphones, and IoT devices. This strategic move strengthens Micron's global supply chain and leverages India's growing semiconductor ecosystem, positioning the company to capitalize on increasing global demand for memory solutions. 3. Technological advancements and R&D focus. Micron Technology is advancing its DRAM and NAND technologies to meet evolving industry demands. For DRAM, the 1-gamma node is set to enter risk production in late 2025, targeting 25% lower power consumption for mobile and edge AI applications. In NAND, the company plans to scale 3D NAND to over 300 layers by 2026 and introduce PLC, 5-bit per cell technology, optimizing cost efficiency for cloud storage solutions. Micron invested $898 million to R&D in Q2 2025, prioritizing 3D stacking architectures and hybrid memory cube designs tailored for AI workloads. These innovations position Micron to address both high-performance computing needs and cost-sensitive markets while maintaining technological leadership. Risks to consider. While Micron's prospects are promising, we should be mindful of potential risks. 1. Market and industry risks. The memory and storage industry is highly cyclical, experiencing significant supply and demand fluctuations that cause price volatility. This volatility impacts Micron's profitability due to its high fixed costs. Additionally, Micron faces intense competition and potential industry consolidation, which could affect its market position and cost structure, adding further uncertainty to its financial performance. These factors make Micron vulnerable to market cycles and competitive pressures. 2. Geopolitical and regulatory risks. Micron relies heavily on China, which represents about 25% of its sales. Chinese government restrictions, including bans on sales to data centers, have already reduced revenue by approximately 10% in 2023, with ongoing trade tensions posing further risks. Additionally, complying with responsible sourcing rules and other regulations may raise operating costs or restrict supply availability, creating challenges that could impact Micron's overall business performance and growth prospects in the region. 3. Operational risks. Micron faces operational risks including manufacturing disruptions caused by natural disasters, extreme weather, or unforeseen events, leading to supply delays, higher costs, and potential loss of customers. Maintaining or improving gross margins is difficult due to volatile product prices. Additionally, attracting, retaining, and motivating skilled employees is challenging in the competitive technology labor market, which could impact innovation, productivity, and overall operational effectiveness. Conclusion: Micron Technology's impressive Q2 2025 performance underscores its robust growth trajectory and solidifies its position as a leader in the semiconductor industry. The company's strategic focus on high-demand markets such as AI and data centers, combined with its strong financial metrics and attractive valuation, make it a compelling investment opportunity. While acknowledging inherent industry risks, Micron's resilience and growth potential warrant a positive investment recommendation. But remember, this is not a financial advice. What do you think about Micron? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.